Welcome to the Australian Business Executive Podcast, where we speak with Australia's most influential industry professionals on the business and economic development issues taking place across the country. You can stay up to date with all our content, including our magazines, podcasts and videos by visiting www.theabe.com.au and clicking on subscribe.
Today's guest is Mike Currie, CEO of QBANK. Mike was appointed CEO of QBANK in March 2017, having previously been the company's Chief Operating Officer. His 35-year career in the financial services sector has included national executive management roles with CBA, Lloyds International, and Heritage Bank. A passionate advocate of the customer-owned banking sector, Mike is a fellow of FINCEA, a member of the Retail and Business Banking Council, and is also on the board of Inju Limited. Mike, thanks for joining us today.
Thanks, Jess. Good to be here.
So, just to begin, would you mind giving us a bit of a background on QBANK as an organization?
Sure. QBANK started out in 1964, and it was started by Queensland Police as a credit union for their own employees. It grew from that start to become the member-owned bank for Queensland government employees, but we still specialise in being the bank for the first responder community. QBank today still remains a member-owned organisation, and we remain true to the original mission of looking after the financial well-being of those first responders.
A couple of years ago, you rebranded as a bank. Why was this change seen as necessary?
It was really about remaining relevant and strong into the future. We felt it was necessary to have a brand that would continue to resonate with and attract younger customers, and we felt that changing from calling ourselves a credit union to having a bank brand would help with that. But really, that was the only change. It wasn't about changing our model or our business, our customer base.
Okay. So when you rebrand from a credit union to a bank, how does this change your marketing and brand positioning?
Initially, it's important to position the marketing to ensure there's brand awareness, both for existing members and potential new members. It was important for us to stress that whilst the name of the organisation was changing, there was no change to the underlying mission of the company, which is to deliver exceptional personal service and financial well-being to those who protect our community.
Okay. So who do you see as your competitors then with this change? Would it be big four banks? Is it existing credit unions as they are?
Yes, we compete in the retail banking space in Queensland, which is occupied by all of the major banks, two of the largest regionals in Suncorp and BOQ, two of the largest customer-owned banks in Australia, and a plethora of others. So really, there's no shortage of competition, and we don't compete with any one of those. We compete with all of them for the business of our customers.
Okay. So the choice of bank is often decided on simple things like the interest rate on offer. Do you view, I mean, you're talking about this a little bit, but does QBank have any unique selling points that you believe position yourself differently from these competitors?
Look, we do. Value, whether that be the interest rate or product fees, will always be a factor in the decision-making process for a potential customer or member. We understand that and work very hard to ensure our products represent the very best value for our members. However, we also believe that price is not the only factor that matters. I keep coming back to our mission to provide exceptional service and to deliver financial well-being to our very special customer segment. These are women and men who serve the community, and we work tirelessly to support them via understanding their needs, supporting their community in areas that matter to them, whether that be via sponsorship or other means, and delivering financial education directly into their workplaces.
Okay. I believe that you've seen this transition as QBank into a bank from a credit union. Can you tell us a little bit about how you came into the organization and what attracted you to it?
Sure. Yeah. I was appointed as CEO in March 2017, as you said at the start, having been the Chief Operating Officer. So I came came into the organisation in January 2016 as the COO, and that was really about helping to pilot the rebrand and the transition to a bank. Prior to that, I'd had executive management roles in some other banks, and that included, in roles involved in transformation and indeed a rebrand at Heritage Bank. So, part of the reason I came into QBANK was to help with that transition.
Okay. And now that you're in the CEO role, what's the executive strategy that you have for the company moving forward?
Okay, our strategy remains to commit to delivering for our membership base. We have a heavy investment program over the next 3 years in people, process and technology to continue to deliver best-in-breed service for our members and to assist them with their financial needs and well-being. We see QBank as an integral partner of the first responder and government employee community, and we'll continue to do everything we can to be their bank of choice.
Do you, from the changes that you've gone from Heritage to COO, do you have any business lessons that you'd care to share with us?
Jess, it's a fairly commonly used expression, but making the customer the centre of everything you do remains key to succeeding in business. Consumers have an enormous amount of choice, and you have to make your offering compelling enough to make them choose you. In a personal sense, just as you need to make sure your organisation remains relevant, you need to always be working on your own skills and expertise to ensure you're able to act on opportunities in your career and in business as they arise.
Okay. And there's been quite a few issues taking place in the banking industry at the moment. How do you think that these are affecting consumers?
Yeah, well, they certainly are. A lot of things going on at the moment. The Banking Royal Commission certainly is front and centre. Some of the case studies at the Royal Commission have highlighted what you could say are declining standards in some areas in banking, and they've also highlighted the need for banks to work harder to regain the trust of consumers. One of the perhaps unintended consequences of the Royal Commission has been a tightening of credit standards of some of the larger banks, which in some instances has reduced the borrowing power of consumers. And what we're seeing is this playing out now in a contraction of the credit market and flattening to declining house prices. So that's certainly something that we're keeping an eye on an ongoing basis. We're still in an ongoing low interest rate environment. The RBA cash rate has been at historic lows now for a couple of years, and it looks as though that environment's likely to be with us for a while yet. And whilst there's been pressure on wholesale funding costs as a result of several mainly offshore factors, there's not really a case for the RBA to be doing anything with the cash rate, which means we'll continue to see home loan rates around current levels for some time yet. So what that means is that we're all having to become more and more efficient with the way we deliver our services to members, because the margins just continue to be under pressure. Probably finally in that vein, we've had a long, again, record period of sustained economic growth in Australia. The fundamentals are there for this to continue, albeit some of the worldwide volatility in the political arena could possibly impact on that and impact on confidence. The financial regulators in Australia have been very active over the last few years to try and mitigate against consumers overgearing themselves, and hopefully that'll hold us in good stead if growth slows or we go backwards.
And what do you think about that? Some of the people I've been speaking to have been saying, the RBA rates are a little bit artificially low, and it seems like we're finally starting to see those creep up a bit. Do you think those will be held relatively steady for homeowners like ourselves?
Look, I expect that the RBA will hold. There's not really any fundamental reasons for them to be moving yet. Generally, they like to operate in an inflation band of 2 to 3%, and they're there. The exchange rate is around where it needs to be. So, all the indicators would point to the cash rate staying where it is. We have seen banks move home loan rates independent of that cash rate because of those wholesale funding cost factors that I spoke about before. But even with that, there are indications that pressure is starting to ease a little bit. So, hopefully we're looking at 6 to 12 months of reasonably flat interest rate movement.
Okay. And so where do you see the future of the organisation for QBank as you move forward?
We remain 100% committed to our traditional first responder customer base. We are investing heavily to make sure we keep up with all of the technological developments so that we can offer our membership base the best available financial products and services, and we'll continue to do that and to build those stakeholder relationships with the people that matter there to make sure we are their first choice.
Okay, excellent. And before we finish up for today, is there anything else that you'd like to add or mention?
Oh, look, it's really, we're at a stage in the industry where, it's probably unique in the sense that there is a whole lot of regulatory intervention and pressure going on at the same time as accelerating technological advance, and really for banks, whether you're big or small, it is both a challenge and an opportunity to keep up with those changes to try and offer the best possible service to your members. So certainly at QBank, we see an opportunity for us to capitalise on the relationship and the trust that we have with our membership base to be able to really grow that relationship and grow our penetration into that customer base. So it's, whilst it's a challenging time, it's a really exciting time for financial institutions like QBank.
Excellent. Well, Mike, thanks for taking the time to speak with us today.
No, my pleasure, Jess. Thank you.
This has been a production of the Australian Business Executive, a division of Romulus Rising Proprietary Limited. All rights reserved. You can stay up to date with the Australian Business Executive, including our magazines, podcasts and videos, by visiting www.theabe.com.au and clicking on subscribe.